Hello, everyone. I am off this week, so Jahed was gracious enough to go solo in our interview with Dermot O'Riordan. Dermot is a partner at Eden Block, which is a research-led European venture capital firm investing in Web3 infrastructure and emerging crypto networks. This week's interview begins a series of episodes over the coming months that will feature investors that are seeding the ownership economy. If you like this episode, we recommend going back and hearing from Julia Lipton in episode 21 as well from 2 weeks ago. We hope you enjoy the episode.
Hey, Dermot. Thanks for joining us today, man. Much appreciated.
Hey, dude. Yeah, great. Thanks for having me on.
Yeah, so I think, we like to start this thing off by really asking our guests about their origin story, how they got to where they are today. It doesn't have to include crypto. So maybe you can walk us through that. Where did the story of Dermot start?
What a nice question, or at least how you framed it. Yeah, sure. So I guess my career has had many different pit stops along the way, but actually I guess the three things that probably bring it all together are one is the idea that technology is a force for good. I think I'm an eternal optimist, and I've always viewed technology as a tool that can be leveraged to create good in the world. Ultimately, it's immoral, but I think in the right hands, it can be used for good for sure. And that's, I guess, what's I've done throughout my career. Secondly, I guess the idea of community and how that ultimately sustains technology and humanizes it and brings it together. And then the third part really is just the idea of investment and how that can supercharge this technology and the communities around them. And so, yeah, quickly on a whistle stop tour, I guess. My career started off as a lawyer, actually. So I was as you may hear from the accent of the name, I'm originally from Ireland, went to school and university in Dublin. But the conservative Irish system sent me down the road of becoming a lawyer because I was good at school, and despite competing in some national maths competitions, I was scared of needles. So I was never going to be a doctor. And then they're like, okay, cool, you should probably study law, even though I never really wanted to be a lawyer. And again, it was tech that was exciting me. But ultimately, after doing a law degree and all these law firms selling me, hey, you're interested in tech and you're good at maths, all this kind of stuff, come join us. We do all this cool stuff. So I did. And I first job was actually at Hogan Lovells, a big international law firm in London, but actually interesting, just touching on the idea of this community. Before moving to London in 2012, I had 6 months, quite fortunately, with the Web Summit, which is now the world's largest technology conference. I joined as number 5 or 6, just there at the start of 2012. I left 6 months later. There was 60 people that helped them run their biggest and most important event in New York, partnered with NASDAQ and Goldman Sachs around the idea of bringing together the 100 teams we viewed as most likely to become major unicorns and IPO before the end of the decade. And I think, honestly, almost probably half of that cohort, like from Twilio, Uber, etc., became major companies, which is pretty exciting and actually where I guess met a lot of early people playing around at the fringes of tech, from Bitcoin and crypto and all this fun stuff. And so I guess I trained as a lawyer. Ultimately, I decided not to stay at the Web Summit, and for better, for worse. But while designing traditional governance schemes around venture, private equity, M&A, big ticket, hundreds of billions of dollars, really what pulled me back in, and I guess really the light bulb moment for me at crypto was in 2016 with the rise of the DAO. That was the moment of, oh fuck, okay, this is mental. This is obviously ridiculous. It seems hopelessly naive, but here I am designing these very effective incentive schemes that coordinate a very narrow group of stakeholders, but actually it's very limited. And the idea that you just spin up a smart contract and aggregate capital from all over the world in a very frictionless manner, and you're all going to vote on investing into startups. So it's this is mental, but I want to be part of this. So it really pulled me closer to the ideals of crypto and what's happening at Ethereum and DAOs. And the next law firm I was at was actually more technology focused. I joined in early 2017. Again, quite fortunate timing with the rise of token investments and ICOs. Oric were deep in Silicon Valley, incorporated Facebook. The US partners are keen to find someone else in Europe who could support them, as people, top founders backed by tier 1 VCs were like, hey, we want to issue a token now to the world and raise loads of money. And people were like, whoa. And Oric had actually developed the safe for Y Combinator. So it was a natural port of call to come help and lead on a lot of this stuff. But obviously, nobody really knew what was going on. So I was asked to help build out the European blockchain practice. And that was honestly,
cool.
Yeah, crazy as well, right? So I had a crazy 18 months seeing the the good, the bad, and the ugly, I guess, advocating to regulators to calm down. There's some real good here. Holding founders' hands, keeping them out of jail, as well as having FOMOing investors who are just willing to throw in $10 to $50 million and want some institution to sort of sign off and say this is somewhat legit, even though that's not what I'm paid for and you guys can't sue us, but sure, I'll review this white paper and issue spot and maybe do some desktop kind of diligence. But I guess really where that brought me to was I joined one of my early clients who had the thesis that if you issue a token, you're a public company. And there was a clear realization in 2017, and we saw that onwards, that nobody was really acting like a public company. And so there's a lot of really smart technical teams, but actually they'd often never scaled a team. They hadn't really thought deeply about governance, community, even the economics of the system they're building. So actually the guy who brought me in as number two is kind of, he just brought in people who'd kind of worked in scaling startups and worked in VC, finance, law, etc. And there's 5 of us in total. And we're investing small checks, roughly 100K. So having skin in the game and the teams are supporting, but ultimately just kind of filling the gaps of where they weren't thriving or just had no experience in. So that was kind of brilliant. That took me through kind of 2018 and 2019. And we ran different meetups across London and every other city that we're part of, just kind of bringing the community together and just trying to raise the standard of discourse, really. Because I think you probably remember, if you're doing anything in the space, there's just a lot of just mental of, hey, we're issuing this ICO, come just throw your money into the smart contract.
I was definitely around during that ICO boom as well. And I remember a lot of people were basically just saying, we're doing this thing that Vitalik wrote up on his blog. Right, like it's right here. This like one theory paper from a think boy on the internet that materialized. So it's interesting that you came to this from law, and now you're at Eden Block. How did you end up there?
Yeah, I guess one of the things, as I kind of mentioned, at the Reserve, while I guess investing and advising, we ultimately realized the importance of community and bringing people together. And one of the things I did throughout 2019, I partnered with a professor at University College London who was super technical. He was actually the chief scientist of Brave Browser at the time. And we would partner to kind of review new L1s, kind of DeFi protocols like Maker, Compound, even Dharma back then. And kind of I'd be the more commercial side of it, he'd be the more technical side of it. And we'd have everything from 20 to 50 people, but like just kind of, again, trying to raise the standard of conversation and moving away from just talking about, token prices and all that kind of stuff. And he was a venture partner at Eden Block. And towards the 2019, I guess the story with the Reserve, that company I was at, the investment firm, ultimately we ran out of our own capital, and all the additional upside we're getting in the teams were supporting throughout the bear market. They were either trending towards zero or else kind of were completely illiquid. Despite having some great teams, we had no more capital to keep doing what we're doing. So we kind of decided to move on and go our separate ways. 2 of the team actually left the space. I definitely wanted to stay in. And I guess kind of a realization for me is that I didn't need to be the striker on the pitch, scoring all the goals. So I kind of realized I didn't need to start something myself, at least yet. So I love supporting people, helping people, being that kind of leverage where possible. I realized VC, you combine capital with the advisory side, it's kind of a dream job. The issue being there's probably about less than 20 firms globally deploying into crypto at the time. But I got lucky with Eden Block. We kind of met at the right time. They were kind of scaling up. I'd made some good investments at the likes of Nim and Vega, and they really wanted to revamp that thesis and kind of their approach to how they support their founders. And it kind of came at a good time, I guess, as kind of really 2020 onwards has kind of been really about the time of moving from concept to adoption in crypto. I think everything up till then was just kind of theory and raising some capital and funding R&D, but no real kind of users. So
I agree. I agree with that definitely for the most part. Like this, and I still think we're pretty far from that when you look at the daily usage numbers of anything other than like Ethereum or Uniswap, right? Like when you get really into it, you're like compared to even like Web 2 tech, right? But that's interesting. You've been active for quite a while in this space. And, I noticed I've read quite a bit of what you've written, and you're definitely immersed in the ethos and the jargon of what's going on here, right? I don't mean that in a bad way. It's just like we are relentless on this podcast about jargon with every person that comes on here. Because, I'm even one of the worst offenders, right? Martin will be like, hey, what does that mean? Deconstruct that 3-letter thing you keep throwing around here, right? Which is totally fair, right? Because part of adoption is not just the tools and driving technology adoption. It's literally the linguistic and intersubjective structures that we're building here and whether they mean something to anyone other than us, right? So, but anyway, one of the things that really struck me in a lot of what you write is I feel like you get at a very honest depiction of what some people are calling the ownership economy, right? Because for me, I feel like a lot of this stuff, and we rail against this relentlessly here, is that people say, oh yeah, crypto is opening up ownership structures to more people and it's democratizing this, that, and the other. But then you go and look at the wallets and it's really just a couple whales and a long tail of people holding, whatever, kind of the same amount as things that ended up being. And then people say, hey, well, we've set aside 50% of our cap table for the community, but it's the community is this, sort of ephemeral thing that's off, ethereal thing somewhere over there, right? It exists, but it doesn't, right? They'll hold it in the future at some point, I swear. But what I found really interesting was this, we have this idea of the ownership economy where these ownership structures will be more broadly accessible, democratic governance will ride along with that, and hopefully we go to better places as a society at virtual or in certain circles of society, right? But you've also been writing an Eden block of investing in this idea of the new open internet, right? And that's combining stuff like the future of finance, institutional adoption, digital communities. Can you tell us a little bit about what is this new open internet? What is this idea behind what you guys are investing in?
Yeah, sure. I realize we all have this kind of jargon, and I think it's definitely important to unpack and double click on what we all mean. I guess very much core to kind of how we think of Eden block is actually what we're in the midst of is actually a cultural revolution that's enabled by technology, and that technology being blockchain. I think a lot of these trends have been happening for the last 30 years, I guess, starting with the internet. But actually, there's a kind of a great book, a kind of article by, I think it's, Jeremy Hymans and Henry Timms, who kind of talk about this idea of new power. And we very much believe that we're moving kind of from an age of like old power values, where actually the way you kind of dominated and had power was connected to kind of proprietary control over information and resources. With the rise of the internet, we're kind of moving to an age of those who have power, at least theoretically speaking, should be those who can actually harness the kind of the power of the crowd and bring that with them. And so kind of the new power values, as you kind of touched upon, are all about kind of sharing, collaborating, co-owning, and so forth. And that's really important. But it is, as you said, we're not there yet. It's obviously messy. I think we have a lot of short-term thinking, but that's kind of the ideal we're getting towards. And I guess I can maybe unpack a little bit that kind of quick whistle-stop tour of kind of the internet from now, where we've got to, if you'd like to. But otherwise, we can kind of dive into some more of the specific use cases. Okay, yeah, sure. I guess it's a little bit hackneyed sometimes, so please just kind of call me up on my bullshit as well. But it's kind of the idea, of course, in the 1990s, we had that era of kind of free intellectual capital and open access. In some ways, free everything kind of broke the humanity of the economics. We no longer kind of understood where we're getting things from. We broke the relationship with end users, and we kind of see that in some terms of kind of the discord between, say, of course, there's news and music, but also then there's also kind of relationships with Uber drivers and Deliveroo and so on and so forth. And another kind of problems per se, or kind of new issues brought about by the internet, was kind of just the information overload. Our monkey brains just can't process all these choices. So kind of the power again moved from the producers to actually those who kind of curate all of this information for us. And kind of we're now ending up in this place where we have these AI overlords, so to speak, to again paint in broad brush strokes, who kind of monopolize our data and attention, I guess. And really kind of the idea of the new open internet is being able to crack open these centers of power to kind of humanize it to many respects and kind of give a lot of kind of power and agency back to kind of the users and kind of producers within these kind of platforms and the communities that form around them.
Got it. And so like for us, that seems like a very similar thesis to the way that we're thinking about the ownership economy, though I'll say I haven't stood up a fund that backs it completely yet, but it's something we've been thinking about. But so then, digging a bit deeper into this, right? You wrote a great piece that I very much enjoyed reading that was digging into a specific example of what this kind of ownable internet would look like, right? What an open economy on the internet would look like. So I think that this piece was on Pocket Network, and I dug into Pocket Network quite a bit, but maybe you could explicate the thesis further by kind of just saying, walking us through what you guys thought of Pocket Network and why you invested in it.
Yeah, great question. And I guess there's definitely a point to say about kind of the idea of the new open internet, that it's ultimately the new business model is connected to crypto, actually, and the kind of the trustless kind of, I guess, trying to avoid jargon as well, but like substrate ultimately of a blockchain that we can all, a single source of truth that we can all trust, is kind of enabling whole new types of businesses. And Pocket Network for sure is one of those. And I guess going back to kind of why we kind of invested into Pocket Network, kind of looking at the period of May, June 2020, when we made the investment, I think we're kind of starting to see kind of the start of DeFi summer. And actually that means kind of traction starting to grow again. People are getting excited. There's kind of capital kind of forming. Usage is obviously spiking. And that brings it with its own problems, right? So I think around a similar time, Infura, which actually at the time was kind of the primary node service for pretty much everything on Ethereum, goes down a couple of times and people kind of joke that, oh, Ethereum's turned off or kind of it's not working. And
Someone
really
call the CEO of Ethereum, get this thing back up. Yeah, I think, and also, sorry to cut you off, but I think, I jumped right into the Pocket Network. One thing for folks who have no idea, right, is I think maybe to frame this in another way is that one of the reasons why investors are so into stuff like AWS and so many are so into, the competitors that are in that space, GCP, DigitalOcean, all that kind of stuff, is that you basically, once you stand something like this up, where essentially you're a cloud provider of some service, doesn't have to be, a node service, anything. But when you're providing a service like this on the internet that can be rented, you are basically a tax on all of the economic activity that's happening on the internet in perpetuity, right? And then, once, then other things kind of materialize around this, like Cloudflare, for instance, right? A few years ago, Cloudflare got embroiled in a censorship thing with, and it's happened a number of times, right? But they're essentially providing DDoS protection for a bunch of sites on the internet. And then someone came to them and said, hey, there are all these like shitty websites or sanctioned websites that are on your thing. And then, there are Web2 companies. They're like, whatever, we'll just take them down, right? Or we'll fire them, right? And so like, this is the non-ownable, non-open, walled garden closure of the commons, if you will, internet, right? And then that's why, sorry, this is me just catching everyone up. Pocket is one of the few candidates in this new internet. You mentioned Infura, which, is kind of centralized, and, there's Alchemy and a number of others that are all kind of this AWS-ish type business where they, they're operating on the same model, but Pocket is different, right? And that's kind of what I want to dig into.
Yeah, for sure. And I think thank you for framing that. I think the kind of the options if you're building a kind of a blockchain application is you obviously run your own node, incur the kind of infrastructure costs, coordination costs that come with that, or you kind of connect to an API like Infura or Alchemy, etc. And it's kind of a no-brainer. Like, it's hard enough running a startup to have to run your own nodes and like janky node software, all that kind of stuff as well. And of course, that just brings a single source of failure. That goes down, so does your app and everything else. And then there's kind of potential privacy issues, the censorship issues, which we haven't quite seen yet, but actually I think we have more recently. I think was it Infura or MetaMask was asked to stop. Actually, Infura was asked to stop serving, I think, IP addresses in certain kind of banned countries. I think it was Venezuela and otherwise.
Wow, I did not know that. Terrible.
Yeah. So that was kind of, again, you're kind of putting your hands or the power or relying on something which you can't necessarily trust. And then against the other kind of interesting part of it is, to this point, is kind of just, it's actually in the kind of, I think it's in the Ethereum white paper, actually in the early kind of forum posts, people talk about, it's like relaying data is just basically taking data from the blockchain, your balance, whatever it is, and sending it to that application. There's no incentivization for that. So people assume that those already running nodes for validating purposes or otherwise would just help out and kind of altruistically sort this. So kind of Pocket actually provided an incentive to actually relay that data and kind of bring it back to whoever wanted it. But the interesting thing is this is ultimately kind of a commodity market, and it's the kind of the lowest cost producer wins. And by not owning your own resources and infrastructure, Pocket, by kind of coordinating a global network of nodes from, I think, 30, 40 countries plus, I think it's 36,000 nodes. These people, a lot of them are running nodes already for the different blockchains they care about. And Pocket supports 45 blockchains. And for them, the Pocket node itself is actually really lightweight. And that's actually just sending you work. You kind of stake in the network. You say, hey, I've got some blockchain nodes that relay data for this blockchain. You send me some work, you get paid. And it's really powerful because they're bootstrapped out of essentially nothing into this global network that's supporting more blockchains than any of the centralized providers at a much cheaper cost. And so I guess the thesis for bringing it back is going back to that problem and the market and the importance. But maybe an area that actually is worth touching on is also kind of the realization that we can actually back them is because they actually had the right values as well. And that was actually kind of down to the founder at the time who crazily, I guess at this time in 2020, nobody was assuming that they were nobody was assuming this was an important area. This is deeply unsexy, as you're saying.
Yeah.
And yeah, sorry, go ahead. You're going to jump in.
Oh, no, I think that's a really interesting spot, actually, that you brought up, because basically, when you dig into what Pocket actually has done with the provision of the data availability, nodes, all that kind of stuff that they're working on, is it's a great argument for me, kind of ideologically, because what they've actually done is built a market around this in a lot of ways, right? Like they have built a truly functioning market so that, when you look at it from the outside, let's say you mentioned the blockchain developer's perspective, right? Someone who just wants to build a decentralized app because there are users on Ethereum or any other Pocket or Polkadot or what have you, and they don't want to get subsumed in all the infrastructure stuff. This is exactly the situation that, say circa 2006, when AWS came online, people were like, well, God, it's so hard to launch an internet business. I've got to go buy some servers. I've got bare metal. I got to hire a .NET developer to manage all this stuff just so my internet business can do things. And then that was an opportunity for Amazon to basically build a nice enclosed walled garden and rent it out and solve a real customer problem, right? Like, great. But now, the opportunity, I feel like, has always been there for someone to actually build a functioning market, like instead of actually a bunch of, people look at it from the outside and go, well, there's 3 providers. What do you want? Right? It's like, well, actually, they're hideously inefficient because behind this, sort of Coasian wall of contracts between one another, where you can't actually see behind it. See what are the actual transaction costs behind there? They're being, don't worry, pay this line item on your invoice, right? There's that sort of efficiency breaks down. We just assume that's the best way to do it. Whereas, maybe there's another way to do it. And so I think coming back around to this, you touched briefly on your piece in Pocket Network about there being a potential for a regenerative economy of public goods, right? And so we're getting into a little bit more jargon, but we literally just came out of 2 episodes where we talked about refi and regenerative finance. So I feel like we've a little bit, if you've been following me, set the stage. So what I found most interesting about this part is that if you compare the business models of the way that we're heading with the 99.7% of the internet activity that is not blockchain is, you can call it the standard business model. You're going to be paying rent forever. Some people might call it extractive, whatever. I don't want to get into the politics of it, but having the ability to make this a public good was very interesting to me. Can you dig into that a little bit more? Because I am very interested in this burgeoning space that pops up between public and private that people are kind of calling the commons and reestablishing that from the perspective of an investor, right? So if I come back around to you and say, what is the actual question? Because I spoke a lot there. How do you actually see Pocket Network becoming an exemplar of this regenerative economy of public goods?
Yeah. And again, I guess kind of there's something that it's interesting because I guess we use public goods a lot and the idea of Web3, and actually you kind of go back to the economic terms and the ideas of exclusionary and kind of rivalrousness. Not all, pretty much most crypto platforms aren't actually public goods in the true sense or in the kind of old school explicit sense, but actually when you think about what we're able to build that just wasn't possible before, they're kind of a new version of these kind of, I think what economists call club goods, where usually you have to pay something to access, but by your use of them, you're not actually using that up for anyone else. And I think a Pocket is a good example of that. Actually, they're building something that just wouldn't otherwise be possible. But because it's an open and permissionless platform, you can actually contribute to that network. You can kind of, if you own your node infrastructure, you can contribute, you can earn rewards, you can earn governance, you can earn upside. And similarly, as an application, actually, the way Pocket's economics work is quite interesting. You essentially buy throughput, my bandwidth. You say, okay, I've got 100 million relays a day, I can buy that. But actually, that's kind of like a commodity. And actually, if you decide you no longer need that or don't need to use all of that, you can sell it back to the network. You essentially buy it up front. It doesn't actually really diminish, so to speak. You're buying a right to the network, which is quite interesting.
That is quite interesting. Yeah, it's basically like, when you talk about abstractions behind the, the transaction costs of the firm, that's just a thing that no one cares about. Like if you looked at AWS, there's probably 100 people who are on that team who are like, do we have enough capacity? What do we have to spin up? What physical infrastructure do we have to provide? But they're not looking at it from the perspective of an efficient market. They're looking at it from the perspective of uptime and making sure our customers are happy and that we can service this and our growth based on our internal models, probably, right? So basically what I heard, and maybe you tell me if I'm wrong here, is this gives you an opportunity to build a more efficient market around compute usage and various other use cases that Pocket is building. Is that right?
Yeah, 100%. It's kind of providing us this with unstoppable access to, I guess, a fundamental resource, which I guess we all agree is blockchain data. That's kind of, if we agree on the importance of blockchains, access to that is fundamental. And we are able to kind of provide this at a sustainable, I guess, a sustainable kind of business model approach that is potentially at the lowest possible cost, I guess, that is the biggest point there. And I guess maybe one or two other points just on that idea of kind of these new form of types of public goods that we're kind of being able to kind of create with crypto. I guess just with these new incentives for collaboration, we're just completely changing and enabling whole new types of businesses. Another one being one of our portfolio companies, Jensen. They kind of talk about this a lot. They're building a protocol that enables anyone who has, again, compute, but to provide it to their network, but this time for deep learning models. And interestingly, in the world of deep learning, there's just no incentive for those kind of building these kind of foundational training models, which have the potential to advance these models for other people. Basically, essentially, you're talking about sharing their learnings. There's no really incentive to do that. Going back to that kind of business model, you extract everything for yourself, or you kind of open source way, kind of do it at the goodness of your heart. But there's no way for you to be incentivized or get upside from your collaboration and support. So that's something that I think Pocket's able to do, Jensen's able to do, and as a whole. And that ultimately is a public good because you're providing a resource that people may otherwise not be able to kind of actually access. And fine, you might have to pay something for it, but it's never going to be at an extractive level, which is super important.
Cool. And I think we sort of backed into what I was really curious about, which is how do you as a VC think about investing in public goods, right? Like when someone comes to you and says, honestly, this happens to me a lot. When people come out and say like, hey, I think this is a public good. And it's like, I often end up in a space where I go, I can't tell if this is a business or a charity, right? And so like, or whether it should be one or the other, right? So how do you think about that when people come to you and say, hey, this could be a public good and that and there, and you should also get in the car and fund this thing, right? What are the things that you kind of think of are investable as public goods?
Yeah, a good question. I think at least the way we think about it, because we're that mission to back the builders of the new open internet, anyone building a decentralized protocol, we largely view most of them are ultimately going to be some form of public goods, whether it's an M for network level privacy or anything else like that. So I guess I'm going back to one of the other things I said, the idea that free everything broke the kind of economics of the internet and kind of the economics more broadly in commerce. We do think it's obviously necessary to have some kind of incentives to sustain these platforms. But actually by kind of bringing in more stakeholders, by bringing in the end users, bringing in the producers, we can hopefully produce that kind of good or output in a way that's much more sustainable, much better cost, but people still get rewarded. And by bootstrapping that network, and I guess as a VC being long-term selfish, understanding that if you build some transformative platform that can provide data for every single blockchain application in the world, across every blockchain application, even a tiny sliver of that upside and stake and those incentives, that's going to be incredibly rewarding. So I think that's definitely one of the key ways we think about it. But it is interesting for sure. I think a lot of the Web3 space in general is about sort of, you got to think long term and you basically got to back smart people and solving problems. And the business model isn't always fundamentally clear, but actually really, I guess, where we kind of play around with infrastructure, if you're solving a problem and people need to do work, they need to get paid for it. So there's going to be some upside ultimately.
Cool. And then you mentioned a couple of things like decentralization. Is there anything that you folks think of maybe you could explicate a bit further in terms of like quantification, right? So like, I'll give you an example. There was this lovely lawsuit that was filed this week or last week, right, against Solana. I don't know if you heard about this, right? But
no, I haven't actually. Interesting.
It was filed against the Solana founders, Multicoin Capital, and a couple other big whales in Solana, alleging that 48% of the network is owned by them, therefore it's not sufficiently decentralized. And then they're making a bunch of allegations about, insider this and that. But, that's, we don't need to speculate in search trading whether or not this is right. It's more about the fact that if you're sitting on the VC side of the table, like I am, and someone comes in and says, hey, we have this, like a Kosh network, for instance, we take like a neutral case, right? Someone in the Kosh network comes to you today and says, we're decentralizing AWS. As a VC, is there anything that you folks apply to say like, okay, they want to make this a public good, they want to do X, Y, and Z. How do we know that this can both be of investable and a public good?
Yeah, really interesting. I think a lot of it, and actually that's the kind of, when we're investing as early as we do, which is aiming to be kind of first institutional check, it really goes down to the core values of those founders. And I mean, I'm not here to shit on Solana, but I mean, we've heard there's obviously been rumors or strange things about Solana in terms of disclosures. Right. And I'm cutting definitely a sidebar, but I actually think 99% of the problems in crypto could be solved with really strong conflicts of interest rules and disclosures. So like insider trading, all of that kind of stuff. But to go back to kind of your point on how it's investable, it has to be the team. They have to be willing to kind of really grow that size of the pie and not be, if you think, and you look at basic things like founder allocations, they've kind of awarded themselves 40% of the pie. They've got short-term kind of vesting schedules, kind of just really digging into, and that's what excites me actually in our job as VCs, because actually, yes, they're building technology and they have to build that, but actually really we think about who can actually become a leader of this open source community. And that's kind of the traits of how will they bring people in? Are they willing to bring people in? How transparent are they likely to be as well?
Got it. No, that makes a lot of sense. Who are they? Why are they doing this? And what distinct, discrete, actual ways have they shown that they'll be willing to do that? And one big way to tip you off is 30 to 40% set aside for the team, vesting within 2 years, huh? Something like that.
Yeah, I don't know if we have actually invested into any team that's had a vesting schedule less than 3 or 4 years. I mean, that's more of an aside, and we're a 10-year fund, so we're able to do that. But I think it is super important, and these incentives matter. I think it's just one of the things that is holding back the space is kind of a lack of long-term incentives, right? Just people not really, they get kind of see the bright lights and get distracted, and kind of making sure that you're backing the right people and giving capital to the right people is super important. So yeah, it's definitely something we think about a lot. So as a VC, for sure, it's the market and the product, but it has to be the right team. It has to be the right incentives. And are they advancing that mission?
Makes a lot of sense. It does, because I think, yesterday I was on a dual call with the person I, won't name, but this person was like, we both sort of almost completed each other's sentence, where I was like, looking at the person was building, it was essentially one of the dozens of distributed compute or distributed energy management and energy distribution platform ideas. And so but we both kind of, he's struggling with how to make it a public good. He's like, I think it should be a public good for X, Y, and Z reason. And I was like, I agree, but what kind of deal, would you be thinking of? And then I was like, maybe something like 10 years. And he goes, yeah, actually, I was thinking of like 10-year vesting for the founding team and everybody, actually. And I was like, I mean, it seems like the right scale of problem. You're not solving a little this is a little DeFi protocol that's going to optimize something as a public good based on Kelly criterion or what have you. It's actually like it's on an automated market maker. It's an automated market maker for energy, right? Like this isn't some easy, 18-month problem. So I think that that's a very important thing to just double down on, is a lot of the garbage that was in the last cycle that we're coming out of. I remember seeing these deals and I passed on almost all of them. No, I did pass on all of them. Anything that had less than like an 18-month vest for the team. You're like, why are doing this? Who said this was good? Hey man, like so-and-so name BC already signed on. Are you in or you're out? Right. So like one of the things that's nice to see at this point in the cycle is that you have a chance to do diligence again.
Yeah, completely. There's that time to really build a relationship with the founders and also push back. And yeah, and then the idea that, oh yeah, this VC said it was good or they wanted this. I mean, that's again just kind of an alarm signal like you should be running in terms of, because ultimately, if you and that's the kind of maybe the good thing. It's hard to kind of be too happy when ultimately a lot of people have really suffered as well. But there are some VCs who've been shown up, and I guess I say kind of VCs, not a lot of them are hedge funds as well, right? But they've shown that they've taken some very short-term decisions and they're left holding the bag, and their reputations to some extent have been hit. And hopefully more of this will kind of come to light over time. So actually founders again will hopefully raise their kind of raise their bar really, and kind of raise their standards for who they take capital from and kind of how they're thinking about building what they're building as well. I think that kind of frame, generally speaking, is just being way more thoughtful is just super important.
Yeah, I think that's great. And I think that you've touched on an important thing. That's a good spot for us to sort of shift gears, which is the founder values. You actually think that they'd be willing to build, a public good out of this? Is it reflected in the vesting and their cap table or token cap table formation, all that? One of the pieces you recently wrote, I think it was recently within the last year, I was catching up on stuff earlier this week, was the piece you wrote for Bankless on Culture Eats Capital for Breakfast. So it reminded me basically that one of the very first things I did when I joined Prime DAO was to help them sort of explicate their values, vision, and mission, right? Because, they had a bunch of products, they had some funding, they had users, but and I've been in the spot before as a product co-founder, basically, where I was like, okay, how do we prioritize what we're making? All these ideas from customers sound great. We have a product out there. Which one should we do? Right. And a lot of the time when you're still in that early phase where you have some customers, but you don't necessarily know that if we invest in the product and keep going in this direction, it's going to lead to a great outcome. You kind of have to go back internally and say, why are we doing this? Right. Well, what is actually, let's combine our point of view and outlook and vision with what customers are telling us and kind of gauge where should we go. And so this seems to be something that you kind of hinted at strongly in your piece on Culture Eats Capital for Breakfast. So the person like you who's probably seeing maybe a couple hundred deals a year, what was the main problem you were trying to address? How did this kind of bubble up to the top for you?
Yeah, it's interesting. It's probably because I wrote that actually towards the end of 2020, it kind of came out kind of early 2021. And it was this, I guess at the time I was seeing a lot of the greed bubbling up. We're having kind of all these kind of DeFi forks and mania. I mean, don't get me wrong. On a personal basis, some of it was fun. Who doesn't love Algo Autumn or whatever that was back then, and post DeFi summer and all of this kind of craziness. But actually, a lot of the focus was on the tech. I think it's easy in this space to kind of, this great new consensus model or this like cutting edge kind of interest rates model, all of this kind of stuff. But actually, as it's open source tech, it's really the community that's the moat. And as you said, things can get pretty noisy. And as you start to give up quite a lot of control, how do you manage that? And I guess kind of when I think about kind of the importance of mission and values, I guess there's kind of two sides to it. There's and you alluded to it, it's that internally kind of ability to prioritize. Does this advance our mission? Is this contributing to our mission? If not, then it's not relevant. And then I guess thinking about, is this in line with our values, like our values of kind of transparency, et cetera? And if you're kind of living those, you're kind of setting the culture. And I guess that's what relates to the second point of like having a really clear mission and vision. It kind of acts as your back signal. It's kind of like, hey, putting this up there, people can see it. Batman can come to it. He can come help out. But really, it's actually the community can come join. They can kind of join your band. They can see what you're up to. If they're excited, they'll kind of come support, hopefully contribute, kind of join your team. And that's super important if you are going to build a community that's sustainable and going to last. So I think it's really important as founders of these early teams to kind of create those early conditions where they think about what they stand for, how they're going to grow, and how they're going to bring others in to kind of help them make that kind of vision a reality, I guess.
Got it. And then like you mentioned this too, and you're 100% right. There is such a drive in our space to basically, look at the sexy new thing, right? The new consensus model, the multi-party computation, this, that, and the other. And honestly, I'm not trying to not trying to take any, I'm taking the knives out for MPC. I've invested in a number of these. They're really great, but just throwing out these, to me, not being a mathematician, buzzwords, right? I'm like, great, fantastic, right? But as you said, though, at the end of the day, if the tech is open source, then there's no real moat, and the moat is users and community. And so what matters to them? Well, they're humans, culture, values, their participation, their ownership, right? So I think this is something I throw out to everyone like you who holds this position like me is, how do things like culture, values, and kind of the murky world of social relations, how do they get captured in blockchains? Do they?
Yeah, no, really good question. I think ultimately on the blockchain layer, no, right? The blockchain layer is that's just recording the kind of the changes of state. That's fine. But actually, when you're building more complex applications on top of that, that's beyond just. So I think layer ones need to stay as neutral as possible. They're purveyors of block space. They're kind of letting all of this great decentralized applications do their thing. Once you're building kind of protocols, whether it's kind of for storage, compute, et cetera, on top, or kind of in DeFi or kind of some of the greater economy stuff, ultimately you're building something more complex and it's going to change. So then as a result, how do you decide on those changes? How do you decide what to prioritize? You're thinking about resource allocation. Do you decide to your successful application? Do you move to a new L1? Which L1? How do you think about that stuff? So I think it's really important for the team to be able to think about this correctly, but also then to get the community on board more easily. If you've kind of really set out more clearly and defined your values and what you stand for, when you make these decisions or bring people into them, they'll feel like they've had a say, they kind of understand where you're going, and they'll be less disillusioned when kind of big changes happen. And like you kind of see this over time with, I know when Compound decided to kind of talk about building its new chain, there's a little bit of disillusionment. There was Maker and the use of USDC, but actually you'd argue if the values were more clear, at least the community would know where they're going and understand where it's coming from. But when this stuff is kind of left, I guess, undefined, maybe the core team or the core contributors say this stuff. Maybe this stuff was said between them, but if it's not public, because we're not working in a room together anymore, we're all remote. So actually, I think as a result, it's more important than ever to really document your key thinking, your core guiding principles, where you're at. And that actually then, again, sets the conditions to enable your community to get behind you and also hopefully to grow as well.
Yeah, and I don't mean to accuse you of dodging the question. I'm going to try to get at it in a different way. Do you think that some of this, then when you do the work on culture, values, where we're going, some of it might materialize as a roadmap, right? And then that gets put in front of engineers and product managers and it's built and it materializes in software, right? Maybe in like the more Web 2 setting, it really depends on how you work. I guess coming back around to it, say you do this work, right? One of the things that I think is interesting is how does this work get reflected? It doesn't have to be reflected in the layer 1 blockchain, right? But might have to get reflected in stuff like governance, right? And governance of the protocol, governance of a DAO that manages the protocol. So how do you see this, as an investor on the outside? And sometimes it's more on the inside as well. Like some of us are taking very hands-on roles in governance proposals, voting, all that. This sort of murky space of why we're here and what we're doing, do you think it then also materializes in this is how we vote, this is how we divvy up power, this is how these decisions are made, this is who gets to make a proposal, those types of things? Do you think it actually comes down to that layer?
Oh yeah, 100%. We're seeing this play out in Maker, but also kind of across all of Maker's not a portfolio company, by the way. I'm just kind of saying it's quite an interesting one. Yes, I really do. And actually, I've had the kind of privilege of working with different of our portfolio companies, thinking about their kind of governance models, their movement to DAOs, whether it's kind of Pocket Network or NIM or some of these others. And actually, I think it's just really important to be thoughtful about your governance, what that stands for. If you believe that things are going to change, governance is ultimately the system and processes that enable that change. And I think I kind of often define good governance is basically creating social acceptance around that change. So really, that's going to be much easier if you have a good process of sharing information with your team. And that kind of goes to your values of transparency, understanding where you're going and why you're going there. You want to scale, you want to do certain things, you want to, all of these kind of clear things in your roadmap, right? And they can reflect your mission and vision. And so when things go to governance, people can get behind it a lot easier. And they can actually you'll have, hopefully, at least theoretically, community members able to spot aspects of your mission and vision that maybe aren't fully been fulfilled, that maybe they can take up and run with. And that's kind of some of the potential of DAOs and having a real community. So yes, I do think that's important. And actually, I think it depends on the protocol in question, but I'm coming around to more and more that one of the biggest problems we have in decentralized governance is actually the lack of processes and the lack of kind of, defined features around who can make forum proposals, which forum proposals should be filtered out or taken really seriously. Like how long should, even basic stuff of like, how long should a proposal be up for? And does this align with, say, our constitution? Because actually we're seeing more and more protocols actually have a constitution that say, these are what we stand for. And actually, these are the principles that we abide by. And actually, if they don't abide by them, this won't be passed. So that actually helps you and helps prevent against governance attacks if you have the right kind of fail-safes in place.
That's good. Yeah, that's actually, I can definitely say that there's more than a handful of DAOs right now who are completely open to governance attacks on those vectors because oddly enough, it's not the code. They haven't thought about what is and isn't allowable, right, within their purview. That makes a ton of sense. I think one of the things you touched, one of the things I'm seeing out there, and I'm interested in your take on this, is I'm seeing this quite a bit. That's probably over the last 18 months or so, but signaling proposals, right? So someone who comes in and says, we're thinking of doing X, and here is what X is and everything that X entails. And this is your chance to get your word in before we push it to governance. I think this is I think it's one of the things that almost every single DAO or protocol that has governance proposals should be doing, just because it's my stance that the outcome of most votes doesn't necessarily matter right now because of how low governance participation is, so that your vote on a proposal is already doesn't seem very legitimate anyway because of how low the governance is. But if you had people participate in shaping the proposal, getting a word in, actually saying, this makes sense, that doesn't, it should be this way, not that, it begins to mirror more of the consensus process, right? So there's some misunderstanding around consensus process, right? People are like, oh, is it going to be 100 people in a room yelling at each other? No, it's not necessarily that. It's more that by hearing and seeing other points of view, you can shape the proposal into something entirely different that then actually gets a bunch of other people on board, it might look completely different from what it was before. And so when I'm actually talking to DAOs or portfolio companies on this front, I actually tell them, hey, stop trying to pretend like you're going to be able to tell. You're going to be able to tell what every single intended and unintended consequence of this proposal is. Just put it up for a signaling proposal. What do you think about that?
Yeah, no, it's a great point. And yeah, I think that's a kind of a great starting point. I guess I'm quite wary of attaching myself to any kind of philosophical system too strongly, but I'm growing more and more attached to the ideas of sociocracy and the ideas of we're going to create these kind of non-hierarchical systems of how do we bring other people in. So that to that point of we want to build something, I think you want to, again, put out that kind of bat signal, share people what you're doing, but actually you should be ideally highlighting who is actually relevant in the community to talk to, get advice from. Maybe they have kind of some expertise in whether it's economics or maybe the social political elements or the technical elements, and you're just getting process and feedback. And actually that may actually include your broader community of non-just community, like token holders, I guess. It could be additional protocols you support or your end users and all this kind of stuff. And you start this kind of advice process and hopefully that comes out, and that's hopefully iterative. And then that would ultimately go to governance. But I think I hate seeing, as you said, here is a fully fledged proposal that's been talked about in the back rooms and you've got 3 days to vote. It's like, well, that's just not very collaborative. Or it's also like, it's a shame because it's also not leveraging the best of these communities. So I really think we need to think more deeply again on that kind of layer of organizational design, understanding who is relevant in the community, who kind of has some kind of reputation or context, who should be cancelled. And then, as you said, signal, bring people in, super important. And I guess we can go into token weighted voting if you want, because that's my major bugbear, but that's more of an aside.
Please tell us everything that you hate about token weighted voting. Let's get into it, man.
All right. I mean, I just think it's just majorly plutocratic, but I think it's just hopelessly naive. We talk about token distribution, but again, one of the issues once you get to a certain kind of scale is, your tokens are largely distributed, but what's the incentive for newcomers to come and join and participate? So actually, unless they are able to build up reputation, then that reputation equates to maybe some economic upside. But actually, you know what? For many people, actually, it's the kind of softer social side that they care about more. So if you can kind of give them some reputation or context that says, hey, you get more of a say in this, that's super powerful and important, and actually creates the kind of the conditions to enable these communities to be more sustainable. So I just think token weighted voting is it's kind of bootstrapped us to some point and helped monetize some governance tokens, but I don't think that's the future. I don't think it can survive. I think regulators will clamp down on it. I also think there's a side point from just purely as an investor point. There's one of the problems in the space, and there's many. We don't have any kind of Buffett style long-term investors. So when you don't have any investor that's willing to buy publicly and hold for 10 plus years, if these kind of tokens only attach governance to them, they're going to be traded and probably slowly kind of eke towards zero unless they have some real productive, useful elements to it. And so I think that's super important. And like probably cash flows attributing to them. So there's a whole bunch of other issues that opens up. I think that's absolutely an absolute necessity. And on the governance point, I just think it's just kind of disheartening to see that there's a whale over there that doesn't add any value and they have all this say. So I think that just has to be fixed.
Yeah, I think it's a good point because, us on this side of it, if we are early enough in a protocol, we're going to get a substantial amount of tokens. And then you've seen a number of people try to ideate on this within the last 2 years for how they manage. It's not necessarily counterparty risk, but it's more like, the right term is something more like they realize that they might have competing incentives. Maybe it's more of a principal agent problem. Really, it's more of the principal agent problem surfacing up here, right? The example being something like A16Z and Uniswap, right? So if you look at what they've done with their Uniswap allocations, they very publicly came out and said, here's this token delegation program we've been working on. We've delegated our tokens to ostensibly trusted public institutions, this, that, and the other. But I'm very underwhelmed by that because if you look at the trusted public institutions, at the end of the day, Martin, I believe, made this point in one of our earlier podcasts when we were talking with Jason Prado from the Drivers Cooperative, is that these public institutions are already ostensibly the main investors in private venture capital funds that then take their funds, invest in, walled garden. None of them are doing this on purpose, right? There's no bad guy here necessarily. It is what it is, right? And so I think that, these public institutions invest in private venture capital, build walled gardens, who make returns for those institutions who are ostensibly, basically, in my opinion, they're hedge funds with libraries and gyms and students attached, right? And so when you think of it that way, A16Z is saying, oh, we have to expand the circle of governance. It's like, well, going back to even an orthogonal thought you brought up earlier around sociocracy, right? Maybe there are these types of governance models that a token cap table can map to before it's too late, and before we are basically trying to wash our plutocracy we're trying to whitewash our plutocracy with delegating out to nonprofits and institutions, right? Maybe that's one way to go forward with this. What do you think about that?
Yeah, I think there's a lot of good points in there. I mean, even going to the ideas of sociocracy and these ideas of teal organizations, largely speaking, they think about having those with the best information who are closest to the actual decision to enable them to make those decisions. We're currently not doing that. We're saying we're actually creating this artificial divide again. If you have all these people doing the work, and then you have this separate, again, essentially shareholder class. We haven't really done anything new in terms of advancing the space if we're kind of just having digital corporations. So I think that, for one, is a major issue. But then looking into kind of examples in the space where people are iterating on this idea. So one of our portfolio companies, Colony, they're like a kind of a low-code DAO framework. And they have this really powerful idea, which they have yet to institute, but hopefully should be in their next version. That's the idea of reputation decay. So you can think about it of the three of us on this call, we can decide to start something. And you could start with your DAO framework, and ultimately you'll all be making decisions. You have different they enable this kind of different context and hierarchy. And maybe we start with quite a high reputation, but maybe one of us leaves. But if we're no longer contributing, and that's no longer being recognized, contribution decays. And that's similar for investors. You can imagine that they actually start with a stake or a kind of a reputation, but if they're no longer contributing or doing certain things, that could be voting, it could be forum posts, could be supporting, could be other things that you could somehow measure. And again, it's obviously difficult to attribute this stuff, and anything that can be gamed will be gamed, but it is quite powerful. Idea. And actually, because the flip side on it, actually, which is really interesting, which really draws me in, is because it works both ways, and because it's actually technically non-dilutive to the token cap table. So you have someone new who joins. Maybe they have no capital, but they have a whole lot of smarts. They can start contributing and they can start earning reputation. And that's really interesting. So actually, I guess it's I think the more sophisticated model is going to somewhat differentiate the difference between economic upside and kind of governance say. So I think it's partly about giving those with, clearly the best information, the ability to have the biggest say in that. But then there's also checks and balances. So things are starting to go wrong at the lower levels, obviously ultimate token holders or kind of those holding the ultimate rights should have a say and should be able to call things up and maybe fire people. But I think there's a need in this space if we talk about empowerment and agency. We need to empower the workers and give them agency, but also give them upside. And I think the current kind of approach to tokens isn't really touching upon that. It's kind of a hand-wavy way of kind of getting past regulations, really.
Yeah, I think you're 100% right on that. And I think you touched on a lot of interesting things. You know, in episode 1, we chatted with Nathan Schneider, who's big in platform cooperatives. He's a professor out in the University of Colorado Boulder, and he basically had touched on something around the limits of extrinsic motivation, right? So you're going to have, you have these regulations skirting token fundraising instruments, right, and vehicles. And if you've seen, and I think this points at a number of ideas, but the one that really stands out to me is this idea that we and you have already have explicated on here, which is the idea of community as moat, right? Like the community is not only the moat, the community is basically the entire thing, right? Like if the community is contributing to it, if the community is doing the work, they're demonstrating that, you have to create an avenue for intrinsic motivation to actually materialize as well. And you're going to see the limits of extrinsic motivation materialize. And honestly, I could just probably point at every billion-dollar protocol that's just sitting there as a dead project, right? Those people join, they did a few things, but at some point that your motivation extinguishes because we're not all extrinsically motivated, right? And so starting with maybe the principles of behavioral science, even, you could back out to what sort of instrument do we need to have to incentivize participation and actually say, once I become an owner of this thing, how do I maintain my participation? And without only just the old, carrot and stick model, because we already know the carrot and stick model thing itself doesn't really work either. That's all extrinsic, right? I'm either going to punish you for not doing the thing you're supposed to do, I'm going to better incentivize you with a reward if you do the thing. All right. And essentially, I feel that this is coming all the way back around, the reason why vision, values, and mission and all that stuff matter, right? Because you're really covering the intrinsic side of things by saying, this is the reason we're all here. Does this vibe with you? If it does, get in, because you're going to have most of your needs met, hopefully, right? Maybe we're going to, no promises, but we're going to get to somewhere where the pie expands, and we're going to do it this way. But if you don't do that, then, well, I give you all the dead DeFi projects from DeFi 2020.
Yeah, I mean, yeah, I couldn't agree more. I think extrinsic desires, and there's all these great studies about this, they're obviously effective. People like to make money, but that isn't enough. Eventually we get bored. I mean, and a lot of us are really much more powerfully motivated by intrinsic desires, the feeling that we're doing good, we're really helping people, we're advancing something that kind of connects to our, deepest desires and passions. I think so. Enabling that and actually leveraging it is super important to create a sustainable community. And that's kind of what we really need to do. And that's kind of connected to, as you're saying, the kind of initial conditions and the kind of culture and values you create around this community, because it's the intrinsic stuff that's going to keep people around.
Absolutely. And I think now this backs into kind of the final topic that we'll hit on in the last few minutes here, which is, Dermot, why DAOs? I'm just kidding. There's more to that question. I just wanted to throw it out there in its most general sense at first. But interestingly, I do kind of want to dig into that, right? You folks have invested in a lot of DAO tooling. I think you may have invested in a couple of DAOs themselves. So I think from an investor perspective, we asked Julia Lipton about this as well. What do you see as the investment opportunity in DAOs?
Yeah, great question. I think we've kind of touched upon it in different ways already. But first of all, in my opinion, if you don't get DAOs right, the whole space just won't really survive or thrive. It's not going to scale to the way we want, because we need to get decentralized organization design and governance correctly if we want to ward off the regulators, as we kind of touched about. But two, if we're to prevent a whole litany of these kind of dead projects, because people ultimately leave, they feel like they don't actually have a real voice. They don't have a real say. And so for DAOs, for me, are the most exciting new potential organizational form in terms of enabling kind of everyone to be part of that collective, to kind of grow their reputation, have a say, and contribute. Yeah, I guess kind of going back to the idea of the ownership economy, ultimately, ideally have a stake in that, in a kind of touching upon this kind of way that you feel like your voice is heard, but ultimately kind of getting some economic upside in that. So yes, I think DAOs are fundamental to me. It's kind of what pulled me into the space right from the start. And I think it's unbelievably chaotic and messy right now. I think we're doing everything wrong. I think, but it's really exciting because there's a lot of really smart people spending a lot of time trying to get this right. I think there's ideology that gets in the way of some of these things. I think we kind of had some back and forth on this beforehand around when people think of DAOs, of decentralization, kind of the idea that some people think that you should have no processes in place. You kind of like just let it all kind of like hands off the wheel, kind of let things happen. Yeah, and you see that in so many discords and DAOs, and then the founders make all the decisions ultimately because they have all the kind of the token stake. So it's kind of it's kind of a fiction that this is a real decentralized organization. But going back to why DAOs, it's, as I said, I just feel it is the most important area to crack. And if we can really scale and build, at least theoretically speaking, organizations and communities that can manage these kind of fundamental important resources on a collective scale that we just haven't really seen before. So I think that's just, the potential is there and it's so exciting. I think it kind of brings to life all of those things around new power values that I kind of talked about at the start. A kind of blockchains and crypto and DAOs provide that kind of technological substrate for that. But we need to get the softer stuff right. We need to kind of get the social layer correct. How do we kind of date each other? How do we interact? How do we coordinate?
Yeah, that's a very good point. And I think maybe to riff with you on this a little bit, I'm a steward of Gnosis Guild, right? And Gnosis Guild has been building some DAO tooling for a while, and they've done some great podcasts on it. You can get into the technical side of it out there on things like the ZK podcast. They joined Anna recently to go into a lot of detail on that. But what I found, if I had decided to join them as a steward, which is a very low time commitment for anyone's like, how many jobs does this guy have? But basically, the point of it was to distill a number of DAO patterns of self-managing organizations and patterns for handling certain things as they come up. Honestly, you can think of it kind of in if you're familiar with it, Christopher Alexander's a pattern language, right? So the famous architect who passed, I think earlier this year, who essentially 50 years ago, built this pattern language for how humans would use, various forms of architecture to meet certain needs, right? And that ended up becoming a keystone for software patterns, right? A lot of software engineers and architects of the 80s and 90s drew inspiration from that to build reusable patterns. And then that became the basis, the intellectual basis for software development kits. And so coming back around to this, right, this is what Gnosis Guild is trying to build, is basically patterns for treasury management, patterns for resolving conflict, patterns for you name it, right? And so you, as a person who's kind of been in there helping folks out with this here and there, do you think that this problem on the social side is something that is primarily going to be solved with these tools of psychology, these tools of business and organizational design? Is it going, or are they going to be solved with new tooling as well, or is it going to be both?
Yeah, great question. I think it's both. I think it goes back to, I'm sound like I'm repeating myself, but I think it is kind of culture and values all the way down. So I think we need to understand how to work together in these type of settings. And for sure, that kind of goes back to culture and values in the training, like from the kind of the way we talk to each other. How do we not get each other's backs up when we're in a different room and we all have avatars and so on and so forth? How do we make sure we're connecting across different cultures? How do we resolve conflict? This is all super important. But I think we can definitely codify some of this in software. And that kind of comes to the tooling point of view. There's a really interesting company, I don't know if we talked about it before, called Murmur. And they're actually spun out of actually a consulting organization called The Ready that's been consulting with major organizations and nonprofits are on the around the thinking
I am familiar with Ready. Yeah.
So this is kind of their productized piece of this to actually enable these kind of companies who are looking to kind of organize themselves and using a kind of non-hierarchical format. And essentially what they're kind of building on that kind of thesis of the nexus of contracts theory of the firm. Basically every firm is consisting of these contracts and agreements. And so they have a way for basically organizations starting off to build up these agreements and come together and do that in a kind of a non-hierarchical fashion. So it's like the basic stuff of right now when we kind of look to kind of build agreements in a document, I'll be like chasing you for comments, etc. So they have kind of software and tools to bring people in, check that the right people have been cancelled, thought about. And the whole idea is actually not consensus based. It's about once you believe it's safe to proceed, you can proceed. And that's kind of the document. You may not be 100% happy with it, but that's maybe your new compensation policy. That's your new underwriting policy. Maybe that's your new mission document. And then you can go back to that over time. So that's kind of an interesting social piece that you can see and DAOs are actually their primary go-to-market at the moment. I think they're working with Orca. They're working with a bunch of interesting teams in terms of how to bring that into some new forms of DAOs. Because right now, I think you have a forum proposal and it's just chaotic. There's no reference to past proposals. There's no maybe reference to whether it's a constitution or any mission or vision. But if you can refer people back to the right documents and give them a process and a way to collaborate, I think that's super important and super powerful.
Yeah, that makes a ton of sense. I think it gives them a nice integrated view of, you go out to some person who just bought your token on Uniswap and you say, hey, you got to vote on this thing. What kind of feedback do you expect to get? Yeah, that's very good. I like.
But actually, that's interesting because I have made an angel investment into an interesting team called Noble they haven't been very loud about what they've been doing, but actually one of the things they're actually doing to that point is being able to recognize different types of stakeholders actually as well and to try and bring them in. So actually they will be able to kind of zoom in and say, actually, you're a Uniswap V3 LP on X number of pools and different number of time. And maybe we should recognize you as having a certain amount of reputation. And maybe you actually have a greater say or stake. And so that's kind of an interesting, I guess, necessary piece to kind of advance kind of the governance and kind of this kind of advice process is to think about who your stakeholders are and how to recognize them and bring them in.
That's very cool. I think I've only heard of really rudimentary stuff happening here, right? Like it's really going from the protocol or the DAO to other people. But this, I think, is interesting because they're looking at, really trying to pull stuff in the other way. They're not just trying to push, right? Like EPNS is one of the ones that I've, kind of been seeing the space where it's like, hey, you can send a push notification to an Ethereum wallet. But my question then was, what would you send? what do you know? Right? Like, what do you know about them? Well, you presumably you know everything. You can go out there on the chain and look, but at the same time, like, what does that tell you? Well, you've pointed out some pretty cool cases here. Like, actually, we know that you provide liquidity to a number of chains. Maybe we know that you signed a snapshot vote here and there, so we know you participate in things. So we would like you, as a person who participates, to participate with us. Right? That's interesting.
Yeah, exactly. And potentially give them more of a say in that stake and bring them in. And so actually, and even then actually maybe to get a differentiated form of access to certain other people in the team or the community. So yeah, I'm not here to kind of show them or talk about them. It's interesting because their mission is the idea of being Okta for DAOs, kind of like how do you kind of provide a kind of a B2B permissioning layer for kind of important tools like Discord and so on and so forth. But then once you understand who your stakeholders are, you can give them interesting access to channels to chat to each other, to support each other, to kind of maybe even have silly kind of leaderboards and all that kind of stuff, which is quite interesting.
Very cool, man. Well, I think we're approaching about the end of everything we wanted to cover with you. And honestly, you hit some really interesting topics there at the end. And I'd like you to take the last few moments then. This is it's not a Web3 podcast, but we have a lot of folks on here who represent that area. So it shouldn't be no surprise to you. We would like you to shill with the last few minutes you have here. Tell us about where to find you online, follow your work, and anything you'd really like to plug.
Sure. Yeah, very kind. I mean, if you're interested, I guess, of course, as a kind of a founder in terms of looking at kind of VCs who care about kind of building that new open internet, of course, kind of come check me out on edenblock.com. But otherwise on Twitter, I'm around. I'm planning to post a lot more, particularly on some of the topics discussed. And that's my name is Dermot_O'Riordan.
Awesome. Well, thank you very much for your time, Dermot.
Absolute pleasure. Thanks for having me on.
My girl gave me a bolt cutter.